Hello and welcome to the week ahead video with me, David Madden. Next week we have a number of important economic indicators to keep an eye on. On Tuesday we have the US retail sales. Also on Tuesday we will hear from Jerome Powell, the head of the Federal Reserve. On Wednesday we will see the minutes from last month's Federal Reserve meeting, and also Wednesday we will have UK CPI. Now, why are these updates important? Well, first of all, US retail sales. The question traders will be asking themselves is, are Americans going out and spending money? The most recent US jobs report was very impressive. More and more people are back in the labour market. Average earnings are rising. This is all positive, but are they going out and spending money? Because spending money is what's really going to drive the recovery along. Also on Tuesday, we have an update from Jerome Powell of the Federal Reserve. At the most recent Federal Reserve meeting, the US Central Bank said the US economy is improving but has yet to make significant improvements on achieving its economic targets. So it essentially said it's moving in the right direction, but we're still not at the point where the US economy is strong enough to justify talking about tapering the very generous stimulus package. So traders are going to be wondering, now that the unemployment rate in the US has fallen to its lowest level since the pandemic began, traders will be now wondering, has that altered the Federal Reserve's view, or are they going to remain in the same kind of neutral stance, saying that things are moving in the right direction, but we're still not quite at the point yet where we can actually begin to talk about potentially tapering our monetary policy. Speaking of the rebound or the recovery in the US, we can see here on the US500, it's continued to be in a very strong upward trend. While I'm recording this video, in the last few hours we've set yet another new all-time high on the US500. That's largely down to the fact that the US Central Bank have a very loose monetary policy in place. They don't appear to be changing it in the near term at least, but on top of that we are seeing a strong recovery for the US economy. So it's kind of the best of both worlds, an improving economy and at the same time a very accommodative monetary policy. Also, what's going to be in focus in relation to the updates next week between US retail sales, Mr. Powell's comments and UK CPI is going to be the US dollar, and the US dollar crosses across the board, but also in particular the pound dollar, because we have seen a fairly decent move in the pound against the dollar between mid July and late July. It had a fairly impressive rally here. It looked to be kind of shaking off the kind of broader negative trend, but since late July we have seen a downward move in the British pound versus the dollar. That's partially been because of the strength of the US dollar. In the week just gone we have seen a lot of volatility in the greenback. The US dollar retreated a little after the core US CPI reading dipped ever so slightly, but then it rebounded after we saw a very strong high PPI reading from the US. So there's a broad sense that the US economy is recovering. That in turn is pushing up the US dollar and in turn pushing lower the pound versus the dollar. So as you can see here, in the last few hours we've now fallen back to a level last seen since late July on the pound dollar. If we do continue to move lower from here and we break below this region here at 1.3789, we could look to target 1.3765 or perhaps even as low as 1.3719. In relation to the UK CPI numbers, it's going to be very much, people are going to be asking themselves, is UK CPI on the rise? Is it reflective of higher demand, or is it purely down to the fact that perhaps energy and commodity prices are higher? So it's worth your while looking out for the core CPI number, because that's a better gauge of underlying demand. If you do see strong demand come through with the CPI numbers, that could help push up the British pound. Conversely, if you see a weak CPI reading, that could lead to softness in the British pound. And speaking of basically the stock market recoveries across the board and demand in general, we've also seen a rally in the UK100 recently. The British market has performed well because of the broader recovery story that's going around in relation to stock markets. So if we take a look at the UK100 here, we can see it's been in a fairly strong rally recently. This week, it's hit its highest level since February 2020, just as the pandemic set in, which really underlines how strong the market has been. while it continues to hold above these three simple moving averages, it's likely the broader upward trend will continue. If we move on higher from here, we could look to retest the recent high of 72.35, and a break beyond that could see a target 7,300 or perhaps up towards 7,400. If you do have a move to the downside, support might come into play from this simple moving average here, which is in the region of 7,190, and a break below that could see a target this zone here at 7,114. That's all from me. Have a good week.